the MOU in itself is great for the camera, fantastic for the optics, but the devil is in the details. Number one detail is, how have we aggregated the lessons learned? And what does that mean in terms of how we get output guarantees? Because it's not just to say we have an MOU, have that been reviewed by stakeholders to make sure that there is replica of what we have in upstream, which is the drill or drop. If you don't drill your facility on a timeline you've given, then you lose your license. You know, we would need something like that.
You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will be looking at the Nigeria National Petroleum Company Limited memorandum of understanding with Chinese firms and the pathway for unlocking value from Nigerian state-owned petroleum refineries. Our guest for this conversation is Dr. Wisdom Enang, an oil and gas analyst who is here to give insights in the studio on this development in the industry. It's great to have you, Dr. Wisdom Enang, in our studio to talk around this latest development. Of course, the memorandum of understanding, according to the Group Chief Executive Officer of Nigeria National Petroleum Company Limited, Mr. Julari, the firms Sanjiang Chemical Company Limited and Xinganchen Industrial Park Operations and Management Company Limited, he describes it as a milestone. But we look at the history of the NNPCL and even the state-owned refineries, which have not been up to capacity, not functioning for the past 2 decades, which is really a big setback in refining. Energy experts have said this process, again, does not address the fundamental challenges that plagued the NNPCL. What is your take on this? You know that already we have the Dangote Petroleum refinery, the private sector driven, that is already boosting over 650,000 barrels per day, looking to double it. So we've seen the impact of that. So what's your take on this MOU?
Well, I think on surface value, the MOU does present some ambience of hope, right? But beneath the surface value, there are certain nuances that, if not well addressed, it won't come into fruition, or it'll be another white elephant. The first of that is the fact that what is the lessons learned, right? We have commentaries coming from even former President Obasanjo, who talked about his, discussion with Shell officials on taking on those refineries. And there were a lot of things that were pointed out. The culture and the oversight on those refineries were poor. We even had crude supply problems at some point in time. Even the maintenance of those facilities themselves, and even the scale that we're working on. And then there's also the thoughts around making the decision whether to repair and operate or to build a new one. And with benefit of hindsight, those that said we should build a new one may well be right, looking at the fact that we've sunk in more than $11 billion in a couple of years, just trying to rehabilitate those refineries and haven't achieved much. So the MOU in itself is great for the camera, fantastic for the optics, but the devil is in the details. Number one detail is, how have we aggregated the lessons learned? And what does that mean in terms of how we get output guarantees? Because it's not just to say we have an MOU, have that been reviewed by stakeholders to make sure that there is replica of what we have in upstream, which is the drill or drop. If you don't drill your facility on a timeline you've given, then you lose your license. We would need something like that to be able to say, okay, look, these are the people that are coming in. Number one, they're not names that resonate quickly when it comes to building, turning around maintenance.
What you call OEM.
Correct.
Yes, yeah.
And also, very interestingly, even when you talk about the financing, it's not clear what the details are, right? I keep saying this because the Petroleum Industry Act was created to ensure that there's transparency in the entire governance framework. And the whole essence and the market sentiments of getting through to IPO means that, investors need to be sure what exactly you're doing. And there needs to be clarity from what your intentions are to what your implementation steps are, and then the outcomes. Very predictable with very slight variance for anything to become stochastic. So for me, the MOU pretty much is more or less the skeletal framework. We still need a lot of things working together to be able to stitch this together. In fact, I dare to say that we need partnership that can execute projects under very strenuous contractual situations, because Nigeria is peculiar. It's extremely peculiar. So that in itself, I mean, it's laudable that the MOU has covered things like turning around the current capacity, expanding on that capacity, and even getting to gas-based collated industries. However, for me, beyond that, we need to be thinking from the hindsight of lessons that we've tried this over and over again. But more importantly, where is the financial exposure to the country, right? Who is paying for what? Because again, that tells us whether or not this is going to be a wild goose chase. What I should expect, right, in the best case, should have been a concessionary agreement where, the NNPCL says, this company, come and take this over, complete it, run it, we'll take some part of it, but run it for XYZ years, maybe 20 years, I've seen 25 years. It allows you to recoup your money and then take it. So, and that way we understand that the risk is totally on them and they must make it work. Yeah. Without that, we have a problem. The other thing is the interference between political pressure and timelines and technical feasibility. Because we see a lot of times where the announcement of commencement and even the scale of commencement is given by politicians and not by, I've never seen the contractor themselves in the time past come out and say, this is what they've pledged to do. It's always the politicians coming to give deadlines. I think we need to look at that fundamentally with the benefit of hindsight, that hasn't brought us anywhere, in time past, whether it be, things when we did previous privatizations, or even when we decided to look at this turnaround maintenance in the past. So all of this needs to be looked at holistically so that we can have some sort of luck. Yeah.
Now, Dr. Wisdom, you've raised something fundamentally around options. For example, we should have been a concessionary move and all that. And Proche has written extensively on the need for Nigeria to unlock value from its national assets and state-owned companies. For example, the Nigeria National Petroleum Company Limited, Proche in its interventions has emphasized the need to, through the Ministry of Finance Incorporated, leverage this state-owned company, put it in a way that the process enables it to be on the pathway, like you mentioned, for initial public offering in the capital market. That's what we call financialization, so that we can unlock value. Like you see what has happened with Saudi Aramco, where it was listed in the market, and you have seen what has happened. The Tadawul, the Saudi Arabia Exchange, and of course the NYSE. We've seen other companies have been listed too, state across the world, and the value they're bringing. So with this in mind, what role should the MOFI play in this whole process? Because, like you said, the PIA has been there for transparency. So what happens at this point with this whole MOU arrangement? I
think the Ministry of Finance is there to ensure that a lot of those legacy challenges that we have, there is this issue of you're going for IPO, pre-IPO sort of arrangements, and you now have this conversation around missing how many billions of dollars. Those are things that needs to be cleaned up. Yes. Otherwise, the capital markets can somewhat operate on some sentiments. Yes. And those sentiments drive investment. So if you don't have a clean bill, it's difficult to thrive in that market. Yes. The other thing is, when you get into the capital market, the primary question is what valuation is, really resemblant of the realities that you're facing, you know, as you get into that market. So it's really important. That's where the Ministry of Finance will play a critical
Ministry of
role.
Finance Incorporated too, yeah.
Correct, will play a critical role in making sure, but also making sure that, you know, that is a litmus test for us in terms of getting something that was originally running as a branch of the government, you know, and then it began to play an interventionist role, and then scaled and decided to go into more of a capitalist-driven segment. So we need to, the Ministry of Finance, you know, the wider application needs to be looking at how exactly we can make this transition in a way that gives confidence to the NNPCL. And again, in recent times, we've seen the presidential directive that stopped certain...
The executive order.
Yes, executive orders that stopped certain entitlements.
Remittances
of all of that. And that has an effect on the profitability of the NNPCL. So it needs to be clear, and they need to work together, Ministry of Finance, to be able to get to a point where everyone is moving away from the apprehension of, oh, now that they've stripped them from those, you know, income returning roles, you know, and those avenues for them to make money, are they still profitable? I think that's a question people are asking. In the long run, are they going to report profits? And more so, I think we need to start looking at profitability of the various subsidiaries, right? Because when there's a windfall of amount of money coming in, there's a tendency for you to focus on the entire group's profitability, even though some of those incomes were not on the back of good decisions. Maybe they were just appropriated to them. They were not done based on investment decisions that were taken properly. So we need to start looking at, okay, profitability, each of the subsidiaries, what is a decision that has been taken at each subsidiary, and what is the outcome, and where is the variance between decision and outcome?
Yeah. Just in a follow-up before I go to the next question, valuations and the view of the assets and all that, that means that if we had leveraged the deal book, what we call the deal room that the MOFI has, that should have been a better way of harnessing deals like MOUs like this, because through the deal room, you can harness transactions that have to do with state-owned companies.
Absolutely, and there is clarity, there is certainty. Again, that's even an upside when it comes to the regulations, governance regulations of the petroleum industry, because there is certainty and there's room for strategic planning, because one can look at that deal book and say, okay, this has the backing of the federal government. There's no room for things to deviate. And if we're going to get more value, I mean, there's a base point for us to start from. So very fantastic,
I think that deal will have to be looked at in the Ministry of Finance Incorporated, because that's what all these other companies, and what you discuss on other platforms have used to bring. And now listen to the next question around transparency and accountability, which of course you've been in industry for decades, has been a challenge, especially like you listed for the state-owned oil company. In view of these concerns around the MOU with these Chinese firms, one of the analysts even said, if it was even with the state oil company of China, Sinopec, for example, that have those capacities, people will say, okay, but these companies are unknown and all that kind of thing. Do you think the presidency should review this whole arrangement in a way of ensuring that it aligns with the goals of operational capacity? And
absolutely, I agree. I mean, review it not with the mindset of revoking, but with the mindset of making sure that there is absolute assurances when it comes to the capital assurance, that there's going to be capital deployed.
Like capital reinvestment.
Correct. Also, review it on the basis that, okay, if we bring this company on board and, you know, they actually know what they're doing, you know, because if you don't have performance guarantees, we risk coming in. And let me just warn, because I'll give you, from my experience that I've had with some Chinese involvements, what typically happens is, and it happened in my states, the China markets in Harcourt.
Oh,
they came in, things perhaps were not clearly, there wasn't that clear understanding, and the execution went out there, and eventually, the whole thing was stalled with the court orders and a lot of court involved litigations because you can't even proceed. Even when you want to complete that place, you can't proceed. So we have all of these indices from other sectors, so we can borrow relief and say that's part of risk analysis. You're looking at, okay, what are the risks? Are there ways I can avoid the risk? Are there ways I can transfer the risk? Are there ways we can even deal with the risk but reduce the consequences of its occurrence, to as low as reasonably probable? So, in essence, when we're looking at this, we need to be asking ourselves, how do we prevent things from going south? Cognizant of some of our, experiences that we've had both in the petroleum sector and away from the petroleum sector. Yeah. But also, if it goes south, what clauses protects us? Yeah. Because we do not want to have a stalemate where we're not moving forward, we're not moving backward. And then we can't even disclose to people that this is the situation we have. So we need engineers in the group, to come in, economists. We need even the legal advisors. What you're signing, as gentlemanly as an agreement it needs to be subdued under legalities, because when push comes to shove, it will be contested in court. Yes. So I think there needs to be a wider stakeholder involvement in all of these. Clarity means taking ownership, and the government needs to put that MOU forward. Let's see what the terms are.
Let's be interrogated.
Correct. Let it be interrogated. As a matter of fact, I might even get overzealous and say, let's even get some of the Senate and the committees to look at House of Rep committees to look at it, because this is not just NNPCL doing something on their behalf. It's on behalf of the sovereignty of Nigeria, whatever agreements will be entered. And cognizant of the fact that sometimes when we do investigations, we're asking for previous administrations of the NNPCL to come out and give account. It means that we need to understand that we need to take ownership, because these guys do their term and go, but Nigeria lives with the consequences.
Yes. You just said it, that we spent over $11 billion in decades on, for example, Port Harcourt and Warri, and they're not functional. It's totally unbelievable, and it's something that transparency has to come in and entrenched, like you said about the MOU. I like those interventions. Now let's look down to the oil and gas industry now as we enter our last lap of conversation. Given the ongoing geopolitical shocks in the Middle East, you've seen the whole issues around Strait of Hormuz and the tensions. Can Nigeria still meet its 2026 oil production targets set out? That's the first lap. Then, of course, what steps do we need? Because we don't have a crude oil reserve. Australia already now has earmarked $7 billion to build its crude oil reserve. That's massive. What is needed to achieve that? And then lastly, what is the short and long-term outlook for the oil and gas industry in Nigeria? You can factor in developments in Dangote, Petroleum Refinery.
All right. Fantastic. Just to contextualize the nuances a bit further, there's been a shift even in the energy geopolitics, because now UAE has left OPEC.
Yes, we have left OPEC. I know that people, you spoke on a sister platform about that.
Correct.
And the impact, yeah.
So it is interesting that, yes, Nigeria, we need to start thinking about strategically improving our production, but so that it doesn't sound academic, I need to tell us why we got here.
Okay.
And the whole concept that brought us here could be couched under a term called economic rent-seeking. When we found oil, right, we just thought about it that, okay, how can we quickly get this oil out of the ground, get it to the minimum spec, and then begin to sell it off, right? And I would say that, cognizant of the fact that a lot of the infrastructure we had prioritized oil and not gas, okay? I also say that, cognizant of the fact that a lot of the oil production went, interestingly, for the path of least resistance. Yeah. Okay? In the US, you're going to hear terms like, the secondary recovery of oil. But here, what we did was drill oil, and then once we opened that well, the ones that were flowing naturally, we connect the pipe lines all the way through and then flow it. But there were some reservoirs that we could have enhanced production with, but they were not just flowing with natural drive. But we could have done some gas-driven interventions and bring out the crude production. So things like gas injection and gas lifting could have helped us. But this, by saying so, I've enunciated the problem. We wanted just to get whatever amount we got and sell it. And as at the time, our capital expenditures, recurring expenditure was not as much as now. So it wasn't a problem. But here, the missed opportunities was actually in not looking at some of those infield opportunities that we drilled, kept, and capped. So you're seeing companies now like Seplat are trying to say, okay, can we do some infield drilling and tie back? Because those fields already exist. They've been developed. Most of them were not flowing naturally. But remember, over time, the pressure has built up in the reservoir, so they can now flow. And also the technology with gas-driven technologies has enabled one to produce that. So that's giving us some glimmer of hope. In terms of our positioning, we're a bit lucky right now because we're doing less. We're supposed to have a 1.5 million barrel target. We're about 1.38 million barrels per day. And we're supposed to sell at 64.85 per the benchmark of the budget. But right now, we're selling above 100. So that's good for us. But that is not something that is due to a real demand. That is due to circumstances. And the market will correct itself. How bad would the correction be? We expect, cognizant of the fact that if the war ends, things goes back to normal. And the shifts that the IEA would do in terms of increasing production and the movement of the UAE away from OPEC, and they're planning to put about 1.5 million barrels in there, we expect a $15 shift in price, $15 to $20 shift in price. Where does that leave Nigeria? Very vulnerable, right? Very vulnerable. But what does that mean in terms of how we can correct things? So a number of things, I'll rank them from the lowest to the highest possibility. Number one, we could in the immediate term start, thinking about tying back those wells and maybe using enhanced methods to bring a lot of our production in. Underpinning the success of that is the asset integrity issues. Because some of those satellite wells, the asset integrity issues has necessitated some shutdown of those facilities, and so you can't flow the wells. And if you can't flow those wells, then you can't get production. So not necessarily because your reservoirs are not flowing, but the asset itself is bad. So we need to start, getting money to fix that. The other thing is crude oil theft, right? True crude oil theft stops production in two ways. Directly, because there's a theft that cuts off the line and all of that, and exposes the chemicals to the environment. The other way is, it serves as a disincentive, to investments. If you know the area is prone to theft, you will not put your money there. So we have two things to correct physically the theft challenge, but also psychologically, we have to reassure people that there is enough security with sovereign guarantees. That means they can now put in money and unlock those investments. Those are the short-term plans. The medium-term plans is to expedite the incentives that we're giving to people that are coming for the bid rounds. People are coming for the bid rounds. How do we get them to be happy so that they can bring in that production we need in the next 5 years? And then we start looking at the frontier business. Remember that what the government had done was to take out some of the money that was left supposed to be for frontier exploration. And if we've done that, the question is, what have we kept for that purpose? Because in the next 20 years, a lot of the production we have today will dry up, and we would be relying on those frontier basins, which we should be exploring today. But another thing, just to tie up the Dangote refinery, of all the conversations that we've had, one thing is very important that we need an answer to. When we build the refineries and scale, how do we guarantee production? For Dangote, it is straightforward. The scale itself, right, allows it to, the economies of scale allows it to go and negotiate WTI variants and bring them in. He has enough storage space. He can play around because of the economies of scale. with a facility that is doing about 100 plus thousand barrels of crude oil refining, you don't have that scale. Even if you brought in a container load, where are you going to put it? So we need to know that underpinning the success is not just the construction and operations of that, is actually the crude supply. But what is my solution? And that's a solution that I gave previously, and I'm glad it's been adopted, is we need to give at concessionary terms the some of our oil fields to refiners. Give it to them. Even if it means taking the fees in retrospect later, give it to them, let them produce what they are going to refine. We have enough fields. Hand it to them, give them tax holidays, and let them expeditiously develop those fields, produce what they're going to refine. And in the next 5 to 10 years, we should come to a self-sustainable standpoint. I mean, there are early production facilities that you don't necessarily need to put in permanent structures. Get them those fields, allow them to take technically right decisions, and then make sure there is performance guarantees that you're getting from what's coming. And at some point, we would see ourselves in a producer, just like Walter Smith.
Yes.
You are producing,
refinery, yes, in Imo
correct.
State, yeah.
They are producing and they're refining what they produce.
Yes.
They never have problems about not having crude to refine. So that's the solution on the long term.
Yes. Very, very, very incisive insights. I like the closing part where you say, give them the incentive, maybe tax holidays, harness those oil fields, and then of course from there we can discuss the terms of value from it, because we need to do that for the long term. Absolutely. But most importantly, we must build our crude reserves. Now, this is a big lesson.
Correct.
The whole issues in the Middle East. But it has been a very interesting time having this conversation with you, Dr. Wisdom Enang, on the Nigeria National Petroleum Company Limited MoU, Memorandum of Understanding with Chinese firms and the pathway for Nigeria's energy security.
Thank you.
It's been very, very interesting having this with you. Thank you once again.
And
hope to have further conversations with you around the oil and gas industry in the future. Thank you once again.
Thank you very much.
To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen, and of course, follow our social media platforms to engage. To come your way again, enrich yourself with the knowledge of socioeconomic developments around you, because it's a wise thing to do. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.